morning and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. If we start by looking at global equities, yesterday we saw mixed returns. US equities were lower and that was led by growth stocks such as Amazon and Microsoft. Here in the UK and in Europe, initially we saw weakness, but throughout the course of the day, equity markets improved and actually finished higher in positive territory for the day. In terms of what was the standout sector, that in terms of returns, energy was a sector that weighed heavily on the UK stock market. We saw the price of oil fall below $100 a barrel, which is for the first time since April. What was driving oil price lower, down 7%, was continued fears around recessions globally. We also saw strength in the US dollar, and in China we saw announcement of an outbreak of a new variant and a surge in cases, and that's China's kept to their zero COVID policy and enforced restrictions on around 30 million people in the region. So that's dragged the oil price lower, and that will feed through into the headline inflation. So if this is sustained, this will be a boost to consumers and businesses that are challenged by the inflationary pressures today. In terms of bonds, we saw strong returns from global government bonds, really benefiting multi-asset investors, and that was on the back of survey data from businesses and consumers that continue to suffer from the looming slowdown within the US, higher interest rates and the inflationary pressures. On inflation, today we'll get US inflation out, which will be a key data point for the markets. What we're expecting is a 1.1% increase in inflation over the month of June, or 8.8% over the year. If inflation becomes in below what is expected, then expect the stock markets to take that as a positive and perhaps rally. If we see inflation coming higher, then expect the bond markets to sell off a little bit because they are more likely to price in higher interest rates. In terms of other economic data, yesterday we heard from Matt, who talked about UK retail sales. They were disappointing. We saw a drop of 9% in online sales, and we saw just in general consumers holding back from those big ticket items given the inflationary pressures they are faced with. In terms of other economic data from the UK, this morning we had GDP figures. So that is a statistic used to measure economic growth. That came in at 0.5% for May, way ahead of what was expected, and compared to the minus 0.2% for the month of April, this was a very good reading for the UK and kind of pushes those recessionary fears, those near-term recessionary fears, out to the future. Looking at the underlying report, what do we see? Well, we see improvements across all the main sectors. Health services was the standout. Construction also showed up well with continuation of the improvements we've seen in recent months as home improvements continue to be a trend. Elsewhere, we saw improvements from road hauliers and also travel services, where there's still that pent-up demand for people to go abroad and on holiday. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.